All right, y'all, back to work. Boy, fantastic job today. We got that slingshot reversal we talked about last night. Well done. Now we're trying to buy pullbacks tomorrow. The problem is markets are really choppy right now. All that geopolitical stuff happening with Iran and Israel right now. So choppy markets. I have a couple key levels I'm watching for pullbacks tomorrow. But I'll tell you though, depending on which one of these levels we get, I'll use different entry tactics depending on how deep the pullback is. So tonight we'll talk about how to time that perfect pullback depending on which level we use. This will be a masterclass on timing entries depending on different levels of pullback. So got a lot to cover in a very important video tonight. Got a great game plan for Friday morning. So charts are ready. Enough of the intro. As always, thanks for tuning in and watching tonight's video. It's been a fantastic week so far. Let's make some more money on Friday morning. S&P SPY ready to go tonight. Nasdaq triple Qs are always ready. We've got 4 clues on the charts tonight that are telling us where the money is waiting tomorrow morning. First clue is right here on the hourly time frame. It's easy to see right now. We're definitely bullish on the S&P SPY, bullish here. Nasdaq triple Qs. We like to use the hourly time frames as an overall directional filter. And right now it's pretty clear the buyers are still in control on the higher time frame. That's our first clue for tomorrow. I have 3 arguably more important clues on some lower time frames. Help us time that perfect pullback entry for tomorrow. But before we do that, though, and talk entries, though, let's check calendar for tomorrow because there's a couple things on my mind for tomorrow. 3 things specifically. First things first, consumer sentiment at 10 o'clock Eastern time, specifically the inflation expectation aspect of that number tomorrow morning. Second thing, don't forget, we are still watching closely for trade talk updates. We also know we've got some dust kicked up right now in the Middle East, Iran and Israel. Geopolitical stuff is certainly weighing on sentiment right now. That's a bit of a known unknown. We're watching that very closely. And the final thing for tomorrow is, don't forget, we're off next week. Next week is the 3rd week of June. It's quad witching. We're off next week, back on Monday, the 23rd. I'll be thinking about you guys next week, but be careful next week. Next week is a tendency, one of the more difficult times of the month to be trading. So be aware, consumer sentiment. Will we get some more trade deal updates? And hopefully everything calms down between the U.S., Iran, Israel, all the stuff happening right now in the Middle East. Let's get back to our charts, though. The money is made on the charts right now. I mentioned 4 clues overall. First clue was the higher time frame direction. The second, third, and fourth clues, though, are all over here now on the tick charts. Remember, tick charts make entry timing easier. All the time frames, by the way, in the upper left-hand corner. That is a 7,000 tick chart. And in case you're watching for the first time right now, what took you so long? I'm kidding with you. That is the 21 EMA. It's pretty much the only indicator that we need to make consistent, repeatable profits in our trade room. There's 3 clues right now on this chart. First clue is this range right here. Now, hopefully by now, if you watch these videos every night, you know that range is a magnet. It's going to want to rotate back and forth with things like triangles, things like pendulum swings or symmetry back and forth. That's a big clue. Another big clue was that range we saw in the pre-market this morning. If there's one thing you learn about trading from me, it's every time we see a breakout, we know that breakout pullbacks are some of our favorite trades in our trade room. We definitely have our eyes on some breakout pullbacks here, 60-11.5 area down below us. And one final clue here. It definitely does look like we're going to grind. We popped up and we're grinding higher right now. Grinding markets are very difficult to stop, and they tell us one specific thing about timing entries for tomorrow. We'll talk about that a bit later on in the video tonight. Anytime we see a grinding market, there's one specific trick we like to use to time the perfect pullback entry. I'm going to talk about that as we go deeper here in the video tonight. Most important thing right now is you'll notice there are different levels on my chart right now. There's a level here at 29, level here at 22, level down there at the 01 around that prior week close at 60.11. I mentioned earlier that different levels are going to give us different entry techniques, right? Depending on whether or not I'm buying relatively high or buying relatively low. I do want to talk about, by the way, as we go deeper, I do want to talk about if we keep grinding going higher. We're going to talk about that a bit later on the Nasdaq. You will want to stick around all the way to the end of the video tonight because that will be a big eye opener for a lot of traders watching here right now. But let's talk about different levels and different entry tactics. So for example, I love the idea of buying a bear trap underneath this 60.29 area. But what's the problem though? I'm gonna be buying relatively high if I do that. I'm not getting very deep pullback. So on a shallow pullback, I'm going to use one of the entry patterns I teach in the free video course. It's a technical bear trap. Let the bears try once, go higher, try twice, and the trick to this is a higher high and getting in underneath a prior swing. So I tell my students in our trade room, shallow pullbacks, buy underneath prior swings. Now, remember, ranges like to rotate, so the amount below the range, the amount above the range, that will give us an idea where to take some profit tomorrow morning. One variation of that, by the way, is sometimes it'll bounce really hard up off that low. If it bounces really hard up off that low, don't chase after it. Keep looking for ways to get in underneath that prior swing. Strong green candle closing above that 21 EMA will be your signal. So promise me you will not get fooled into chasing this thing higher if all we see is a strong bounce off that 29 level. Now, what if we pull back a bit deeper? If we pull back deeper, I love the area at 22, 11. I mean, in all reality, this whole area down there really is basically one big breakout pullback zone. In those areas, I can be a lot more aggressive on my entries because here, for example, on a deeper pullback, I can take a relatively small amount of risk for a much larger amount of reward, right? My risk and reward is quite lopsided on a deeper pullback. These are a lot more attractive. We may not get it, but these are a lot more attractive. So in these deeper pullback areas, and again, I love this 11 area down there, I would love to get a similar bear trap, but now it's more like a 2-try failure pattern like I teach in the free video course. Still a bear trap here, right? I love the idea of a breakout pullback. Let those bears try once, let them try twice. Remember, always a higher high. I want those bears trapped in going higher. I want to use their stops to fuel that move higher. Now, this is where kind of the fun happens because now as this market now wants to go back up into that range overhead now what I can do is start adding to my winner. Now, watch closely on this because we saw a couple of these this morning, the trade room. Shallow pullback, higher high in price. The key to this add-on is the separation off the moving average. If I see a shallow pullback and separate, I'm going to start adding to my winner. Now, in these situations, we're taking profit off, back at that high, we're leaving a big runner for our pendulum swing. Remember, range rotations always leave a piece of that runner. So now, one more wrinkle that you want to be aware of with this. The deeper that pullback, the more desirable it is, but now the more likely it is we pop up and retest the low. Like today, for example, we made that big strong run down, retest that low, and then got that big run going higher. So be aware, if we get a nice big move down, we oftentimes will see the bears try once, try twice. We'll oftentimes get that nice squeeze back up again. But think about this. With all that strength going lower now, oftentimes it'll hold the underbelly of that range. It'll run back down and take out that low. Now remember, this is not a reversal. Remember that hourly time frame. We're still very bullish overall. These are retest trades. Take the retest trade. Do it again. Bears once, bears twice. Same idea. Bear trap. As we run higher now, look for that separation off the moving average and make sure we add to our winner for that run back up again. So the deeper the pullback, the more likely we get up, retest, and then back up, just like we saw this morning around that PPI number. Those are some variations of this I look forward to tomorrow. Now, here's a big question. What if we go higher here? I think we could easily start grinding higher right now. There are 3 trades I'm going to look for if we grind higher here overnight. Before we dive into those though, let's slow down for a couple seconds, because if you're here for the first time right now, this might be a brand new language I'm speaking right now. I know most of you guys watching right now, you guys know these patterns. You're making money with these already. But if you're tuning in for the first time right now, this could be way over your head, a brand new strategy. Don't you worry though. I teach this entire system in my free trading course. In fact, I have a ton of examples of all these entry patterns I'm talking about right now. What I'll do is I'll put a link up top here for you. Upper right-hand corner, hit that little link that popped up right there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that literally tells us exactly where to find the winning trades each day. Very simple. You're going to love that technique. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more consistent profits. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So if you're still missing the best entries right now, if you've lost your confidence in your current strategy, pause this video real quick, hit that link that popped up right there and watch that free trading course. You're going to love all the trade examples I include. I have a ton of trade examples of traps and add-ons included in that short video series. The best part is it's completely free for you. Also, keep in mind too, I'm going to put all the important links you guys need to learn the roadmap, time better entries, start making money on your own, get your confidence back in your trading. All the important links are below the video in the description. And don't forget too, guys, I post a ton of updates throughout the day on Twitter or X. If you're on the X platform, give me a follow again. Videos, mindset, chart stuff on X. Give me a follow again. All the details you'll need to learn the strategy, hopefully make a lot more money because of it. I'll put everything down below the video tonight, description of the YouTube video. All right, I think we've covered now. If you're here for the first time right now, I want to make sure we pause there, because we do look at things on this channel differently than a lot of other channels. So I want to make sure you guys know where to find more information. Grab that free course. Most folks start making money all on their own, all from that free video course. Okay, so now we know shallow pullback, want to buy as low as we can. Deeper pullback, great, but be aware of the potential for the rollover and do it again. All right, I'm getting excited just talking about this. I love this stuff here on these videos. Let's now grab the Nasdaq right now. I want to talk about if we start grinding higher here on the Nasdaq. Now, real quickly, guys, if you're enjoying this video right now, please help me grow this channel, will ya? By hitting that like button and make sure you subscribe. I know we're all busy people. I really appreciate you guys tuning in and watching my videos here on this YouTube channel. So thank you guys so much for the likes, all the subs, all the love I get in the comment section below. I really appreciate you guys tuning in and spending your free time with me here on these videos. Now, I promise I'm done begging for likes here. Let's dive in right now on the Nasdaq. It's pretty easy to see right now we're bullish overall. And again, we don't want to get too far into the weeds on the hourly time frame. I don't want to go too far into detail. What is the overall direction, right? That's all I really use it for. In all reality, I don't need much more than that on the hourly time frame. The hourly chart gives me the best overall direction. Now we've got our tick charts, and you'll notice this tick chart is a little bit different. It's a 4,000 tick chart. The Nasdaq doesn't have as much volume as the S&P, so a little bit lower time frame there on the Nasdaq. Are you seeing that there's a lot of good clues right now on this Nasdaq here? First clue, strong run up. Now, what does a strong move tell us? Well, what happened last night? We had that strong run going down. What happens? They want to retest that low, then back higher again, right? So that was a very strong run up. That is unfinished business. If you ask me, pull back, trying to retest that high. Anytime we see a strong move like that, expect a retest of that level. Second clue right now is this bullish range. Why is it important? Because again, ranges love to rotate. Now, we're bullish overall. It's a bullish range. We may see this thing break out and run higher here. I mentioned earlier, there are 3 types of trades I'm going to look for if we do break out going higher. And again, one of those will be that slow, choppy grind that we may get as everyone waits to see what happens between Israel and Iran. And of course, the final one here is that range down there, right? That range down there. I love how that breakout pullback zone lines up right around that channel. Now here on the Nasdaq, a small variation of we saw earlier on the S&P. So real quickly here, on a pullback right now, can we all agree this is not a very deep pullback on the Nasdaq, right? On the S&P it is. On the Nasdaq though, it's not the deepest pullback. So on this pullback zone, I'm looking for, you guessed it, I want that technical trap pattern off of this one, right? A small adjustment. You can see the difference, right? This is not a very big pullback in the Nasdaq. It is a big pullback though on the S&P. It's all relative based on that high right there. One of my favorite trades though for the Nasdaq right now would be a nice deep pullback. I would love this Nasdaq if it went all the way back to that low a day. Run it all the way back down over that low a day there. Get those bears coming in, bears once, bears twice, and squeeze those bears up from there. And again, remember, that range above us will be a magnet. So if we get lucky to get that, what basically becomes a double bottom, if we can get the double bottom right there, then we can look for that pop up, that separation, and everything else stays pretty much the same, right? That separation and that add-on. Again, a lot of examples of those trades in the free video course I mentioned earlier. Bear trap, add-on. Remember, when it comes to the add-on, make sure you get that separation, right? The separation is so key off of that. And again, oftentimes we'll get that bear trap, we'll pop it right up, we'll hold the underbelly, and we'll get one more leg lower. Again, this is that retest trade. Retest trades are oftentimes our biggest winners in our trade room because anybody who sells up here, their profit targets now are down here, right? Sellers up here become buyers down there. That's why retest trades are so good, right? Run down, retest, trap them in, and squeeze those stops back up again. Again, we're an overall bull market right now. So buying retests are great trades, if you ask my opinion. Bears once, bears twice, squeeze back up again. Okay, so a small adjustment there on the Nasdaq compared to the S&P. Now, going higher here right now. So there's kind of two things I'm watching for. Both the S&P and the Nasdaq right now, they both have some pretty significant highs up overhead, right? Both the S&P and the Nasdaq. So if we go higher here, I've got to be worried about buying right into those highs here. So I want to talk about now 3 different kind of techniques that I'm going to watch for right now. For example, let's say we run lower, we bear trap down here, and we get this just crush, right? It just rips going higher. This could be based on headlines, maybe Iran and Israel buddies again. I don't know, right? But let's say, for example, we get a very strong run higher, lots of separation off of that moving average. If I can get a really strong run up, again, I don't want to buy these highs up here. What we'll do now is use that range for a breakout pullback, right? Very simple. Get the moving average coming here. And when I say breakout pullback, think about a 2-legged pullback. 1 leg, 2 leg, ideally, between you, me, and YouTube, ideally, a bit more than a measured move, right? A, B, C, D. That will give us our entry location. Now, we're not going to blindly buy that, obviously. Well, maybe not that obvious. We don't blindly buy these areas. We like to use bear traps in a bull market like this. So again, bears once, bears twice. We're trapping those bears in, and the goal is to go back up and retest that high. So again, if we see a very strong, convincing rip going higher, now we use that range for a breakout pullback. And again, think about a 2-legged pullback. 1 leg, 2 leg, a bit more than a measured move. Grab that bear trap and back up to retest the high. That's kind of the easy one. But what happens though if we pop up and start slowly grinding? This also applies to the S&P as well. If we start slowly grinding, going higher here, there's one type of entry we always look for. It's getting in below prior swings. We look left, we find some prior swings here. What I'll be doing is looking for channels off the highs, off the lows, and looking to line up those prior swings around the lows of a channel. oftentimes what happens is again, we'll kind of run up, we'll start grinding, going higher here. Again, this is not a convincing rip, right? It's not a real strong pop. It's a slow grind. Now remember, we know we got those big levels up overhead. So we don't have a lot of momentum in this situation. We don't want to buy high. We want to buy as low as we can. And again, I'm telling you right now, when markets grind in one direction, they're very difficult to stop, but we don't want to buy too high. We want to buy under swings. So focus on finding trend lines off the highs, bring it down to find those channels, and focus on getting in underneath prior swings. And most of the time what will happen is this will get below that 21 EMA. We'll trap those bears in, and we'll just keep on looking to pick off those entries below prior swings. I cannot emphasize that enough. If it grinds higher, find those prior swings, get in below prior swings, trap those bears in, rinse and repeat over and over again. And again, we know where the market wants to go. It's going to want to take out that high, and the closer we get to that high up there, the closer we get, the more important it will be to be selective to get in below these prior swings, all right? Please, please, please be careful when it grinds like that. That's the trick to making consistent or timing the perfect pullback if it slowly grinds. It's always underneath prior swings. Then the easiest one for tomorrow is a pop into a range, right? I mean, if the trading gods want to be good to us, want to be easy on us tomorrow, what will happen is it'll pop up and go right into a range up here. These are always my favorite because if we pop into a range up here, that range becomes a magnet, right? It'll want to rotate back up again with symmetry, right? Basically, right? So if we do pop up in a range up here, remember, ranges anchor the market higher. So if we pop up into a range up here, that range becomes an anchor. It's almost impossible now for a big move back down because that range is an anchor. So we pop up into a range up here, now it's easy. Now that range right there becomes a breakout pullback. We wait for price to pull back. And remember, we're not going to blindly buy these areas. You can do that if you want to, but it's just not consistent enough to blindly trade them. And I wish I had some special indicator or order flow or divergence, but guys, I've been around for a long time, almost 20 years now in trading. And I always go back to traps. Traps are always the easiest ones that I know to make consistent money. Yeah, I get it, right? There'll be some divergent signals that work every once in a while. There'll be some tapering that works once in a while. Even a broken clock is right twice a day. There will be times that indicators work. In fact, in my experience, they work just enough to have you keep adding more filters, right? Okay, anyways, I'll have a soapbox now. Trap those bears in once, twice. Now remember, in a range market, I can be a lot more aggressive because I know that range is a magnet. So trap those bears in. And remember, in a range market, please, please, please hold a runner and add to your winners. Those are the two most important things in a range market. Hold a runner and add to your winners. You know where the market wants to go now. It wants to go below the range. It wants to rotate above the range. We know where the target now is. So hold a runner, leave a runner. If it takes duct tape or handcuffs, keep your fingers off the button. Let that sucker rotate. And I shouldn't say keep your fingers off the button because you want to push that button when you see that add-on above that moving average. All right, repeat after me. Ranges love to rotate. Bear trap, add on, let that sucker run. All right, guys, those are three variations. If we go higher, again, be ready for that slow grind tomorrow and buy below prior swings. And what do you think? Well, I get that bear trap right here. I honestly, I would not complain at all if it ran all the way down for a bear off that low. That's a beautiful trade for tomorrow as well. So bottom line is the game plan's ready. We have a tactic for no matter what level we get for tomorrow. Now we see what we get and grab those perfect pullbacks and make some more money on Friday morning. Now, speaking of Friday morning, again, we're off next week, unfortunately. I'll miss you guys next week, but don't forget, every morning in our trade room, back on the 23rd. Guys, the easiest place to make consistent profits is to learn and trade along every morning in our trade room. Again, as always, I'll put all the important links you guys need to learn the strategy. Start first with the free video course. You're going to love that video series. Enjoy all the trade examples. Then come join me in my trade room and we'll do it together. In the meantime, guys, hope you learned a bunch today. Hope you earn a bunch tomorrow. Be well. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.